All right, welcome back, traders. John Caruso recording Tuesday evening, November 22nd for Wednesday's trading session. What we're looking at here is a look at the January crude oil contract. We're going to take this from the top, literally, pardon the pun. $130 a barrel. Of course, that spike high, that parabolic move in crude oil came on the back of Russia's invasion of the Ukraine. We did see the market then crash back to 96. Retested about 123 over here before a breakdown, and then bear market trading action ensued. We did find an anchor point down here along 76 back at the end of September, rotated back up, found an anchor at the top up here at 94. And then we've seen just this sideways choppy trading action that has kind of ensued over the last 4 or 5 trading weeks. Last Thursday, we did see a very important technical breach on the charts. Last Thursday, we did take out this swing low that was identifying the bottom portion of this range at 81.50. We did breach that level, which was a potential ominous sign of something bigger to come on the downside. And of course, over the last 2 trading sessions, we did see more follow through. Now, of course, yesterday's session on the rumor that the Saudis were going to be pumping more oil, we did see about a 5% breakdown in crude oil. We did see a massive bull defense down here at 75.30, round tripped back up 5% to finish unchanged for the trading session. Then, of course, today's trading session, we did see a modest gain of up 40 basis points. So what's my base case for crude oil right now? Well, first and foremost, we do have a established bearish trend in crude oil. So we are going to look at it from that context here. So this candle that we saw on Monday off of the rumor of the Saudis pumping more oil, this is clearly a bear market failure. So I do think that over the next 1 to 2 weeks, the market can actually rotate back to the upside, back to the midpoint of this established trading range that we're in, which comes in between about 84.50 and 86.50 on the upside. We're going to call that the sell zone, the immediate term sell zone for crude oil prices. Now, these dotted lines that I have drawn in here, this yellow dotted line and this purple dotted line, this is the 61.8% Fib number, and this is the 71.6% Fibonacci number. So I do believe that we can rotate back up if we do get an immediate term overbought signal. I do believe that from a strictly technical viewpoint, that this market should rotate back to the downside if it perhaps says something bigger to say on the downside going out into the end of the year, perhaps right around that December Fed meeting on December 15th. So this is just a strictly technical view of this market. Of course, this is a very fundamentally driven market and anything can change. But from technicals only, this is what I'm seeing on the charts. Now, where is this analysis proved wrong? Is if we can get above this red dotted line, which is my trend line. This level is established at about $90 a barrel. If we get above $90 a barrel, I think it's a high probability that we're going to reattack and break through this $94 peak that was once resistance, and we can power up to this next peak up around 98 and potentially $100 a barrel in crude oil. So that is a low probability at the moment. The highest probability, our base case right now, is that we can rally back into that sell zone and once again fail back on the downside. Now, I'm going to give you something else to think about here. If our analysis is correct, on the downside, how far can we move on the downside? Well, back over here, this would be the next logical area of support in crude oil, which comes in down around $65 a barrel. Okay, so that is obviously a lower probability. We think that we get to 65, but certainly something that you have to pay attention to based on some of the technicals that we're currently staring at. So back zooming out to the daily chart, I'll review this one more time. Perhaps we get some chop in here. This is a bear failure. So this tells me that the next $4 to $5 is likely coming back on the upside before perhaps we register immediate term overbought within a bearish trend and we rotate back on the downside in crude oil. So that is a look at the January crude oil contract. Best of luck to everybody out here. We'll catch you back here next time. Take care.